So zero DT option markets in the right underlyings, usually we're talking about S&Ps, are incredibly liquid and give retail option traders access to fast-paced results.
Usually it's about SPX, correct? You said
SPX, ES, whatever you
Okay.
want to talk about. SPY. While the speed is generally an asset to investors, it can also be frightening as it's possible to take a large loss very quickly. At tastylive, we tend to focus on managing winners, but let's see how managing our trades based on their downside performance has treated zero DT short premium positions. Okay, let's take a look.
This is going to be interesting.
So we use 10 months worth of intraday data, same as we've been doing every time. We just keep increasing the depth of this. And we're going to look at a bunch of different ways. First with no management, then closing all the trades, winners and losers at noon central, then closing just the losing trades at noon and allowing the winning trades to go to the close, and then closing all the losing trades at 50, 100, 150, or 200% of the credit. And at that point, we're letting the winners go, but just closing the losers. So for this study, the winners received no additional management, meaning we just let them go.
Okay.
This has been a very positive cycle for this type of trade.
The market has accommodated for this type of trade.
Yes,
100%.
the market has been very
Today would have
kind.
been another great example of it. The first hour of trading or 50 minutes, we haven't gone anywhere.
The market has been very, very kind. The market has been very kind to this form of trading for the last, however many it is. What did we say? 10 months. It's been very kind for 10 months. Collapse in volatility. We really haven't gone anywhere. It's been very positive for zero DT trading. So the numbers are going to look good. Let's go to the next slide. So first, we're going to look at straddles. When we say straddles, we mean we're selling the at the money straddle in the zeros, and we're buying the back month 30-day strangle at the expected move. So the win percentages with no management at all, not touching anything, 61%, closing at noon, 68%, and closing just the losers at noon and letting the winners go at the end of the day, 55%. The average P&Ls are all positive because this strategy has worked.
It's hard to argue with that. I mean, you've got just about everything there.
It's
just
hard to argue
straddles. No, straddles use a lot of buying power.
Yeah, the straddles use a lot of. No. This is still with the back month strangle. Everything has back month strangles. So these are all defined risk positions. But my only takeaway from this is closing everything at noon, which is the way we like to do it, had kind of the least profit, but it had the highest probability of success, and I think that's kind of where we've been.
But you say closing everything at noon. You haven't really looked at. You haven't really kept anything on for an hour. I mean, you're just really managing because you're okay with it. You have a little hole in your lip.
Yes.
Yeah. You've just been managing at a buck or whatever profit.
Yeah,
You've just
sure.
been managing your winners.
I've been taking winners.
Yeah.
Yeah, winners even quicker. Let's go to the next slide. So this one we looked at, we did it with the stop losses. So you sell the straddle, you buy the back month strangle, and in the straddle, when let's say you sell the straddle for, I don't know, let's say $6. 50% stop loss is when it gets to $9. Okay, 100% stop loss when it gets to $12, that kind of thing. And in the end, regardless of whatever you did, the results are all pretty similar, and it didn't really change. In other words, if you stopped yourself out and just let your winners run when they had winners and stopped yourself out in the losers, all the results were pretty similar. Just because the strategy's been working and there's nothing else, I mean, the C-bar is lowest when you take the losses quicker at 50%, that's something to talk about. But the reality is everything worked. But the 50% stop loss, so sell something for $6 in the straddle, buy it back for $9 when it's a loser, as long as you're letting your profits win. Now, I find it very hard to let my profits go. So
I do too. So maybe it's easier said than done.
It's way easier said than done. Way, way easier said than done. Let's go to the next slide. Now here's a $30 front month iron fly. Sell the straddle by the wings, all in the zeros. This is a little bit less of a winner, a little bit less, but your C bar is really low here. It's a 1/3 of what it is doing something else. No management.
You're
Closing at
picking
noon.
between good and better here. I mean, all
You're
the
picking between good and better. And you're picking about how much money you want to risk on the back end, and you're picking about how much money you want to, like if you do front month straddle by back month strangle, you're usually putting up about $2,000 plus $2,000, $3,000 to make the trade
in like a SPY.
in SPX. And if you're doing this, you're putting up
And then
probably
you're using portfolio margin that's significantly higher in a regular margin account.
Oh, I'm sorry, 22,000. Take it
Yes.
back, 22,000.
Yes.
If you're doing an iron fly here, this is like 12. This is SPY,
Mm-hmm.
so this is a fraction of that. It's about half or a quarter, half or a third. You make less though,
Yep.
a little bit less.
Yep.
This is a front month iron fly. Again, closing losers at noon versus closing everything at noon. I'm always a fan of closing everything at noon, and just easier. And let's go to
Who
the
wants
next.
the aggravation, right?
Yeah, who wants the
That's really what
aggravation?
you're saying.
And here is the $30 wide iron flies with stop losses. And this is stop losses on kind of on your strangle piece. So I'm sorry, on your straddle piece. So what's interesting about this is it's not as quite as attractive as like closing at noon, but if you want to do it, all the numbers are still positive. And again, you go right back to the 50% number. Like, here's the craziest thing. Every number is positive
Yeah, and
just because of the marketplace we've been in.
Yeah. I would be very. Although it's worked every day, I'm still a little apprehensive about having this continue to work like this.
It has literally worked every day. It is scary.
Scary. Yes. But again, the market's accommodated, as you said. So
Yep. And every number is positive because in the end, letting your winners go. What we did on the studies, we let our winners go to the end of the day, and we basically adjust our losers at noon or at different points on a stop loss, and just to see what the cumulative effect would be. The problem is if you took your winners off at the same time that you're taking the losers, the results might not all be positive.
sure.
And I think that's easier to do and much harder to wait to the end of the day. But it's hard to say when we're going to take everything off. So it's like,
When you're doing a
you're doing a
study like
study.
this. Yep.
yeah. So let's go to the last slide. And we went back and we checked every number this time, over and over. So we're still learning how to best trade the 0DTs mechanically. The defined risk trades naturally already have downside protection from the long strikes. That's mostly the front month iron condors. But further trying to manage losses hurt both the pop and the average P&L without significantly reducing C-bar. Naked strangles, however, with relatively timid stop losses such as 50 or 100% of the credit, gave up relatively little pop or average P&L while seeing a good drop in C-bar, which is nice to know. And that's probably worked best for me. It remains to be seen what effect managing both winners and losers in 0DT has. But for now, it seems that managing the losers should be reserved for those willing to trade with undefined risk. And I'm cool with that. That's how I prefer to trade these. Like we've said from the very start, I don't think there is a great strategy for managing risk in 0DTs. I think the play in those things is you take profits consistently when you can. Don't try to be a hero. And whatever strategy you want to use, just stay consistent to it.
Totally agree with you. It's not a management type
It is not.
player because you don't have the time to be right.
One or two adjustments, and then you've got to basically move on.
Let's take a quick 90-second break. That was a great study. Let's take a quick 90-second break and come back. We got more Tasty Live after this with Joy, your friend and mine, Mr. Scott Sheridan. Next, Tasty Trade World Headquarters.